Cold open. What if the biggest opportunity of our lifetime is actually the biggest financial trap we've ever seen? Right now, AI is being sold as inevitable wealth. Miss this moment, and you'll regret it forever. But history has heard that sentence before, because every major market bubble started with the same promise. 1. Establish the threat. AI stocks are soaring, billions are pouring in, and skepticism is disappearing. That's never a good sign. Hook. When doubt dies in markets, danger replaces it. 2. The central question. This video is not about whether AI is powerful. It's about something far more uncomfortable. Are we witnessing the birth of a new era or the early stages of the next market collapse? Hook. Because a real revolution can still produce fake returns. Part 1. Why every bubble feels unique. Bubbles are stories. Bubbles don't begin with greed, they begin with belief. A belief that the old rules no longer apply. Hook. The most expensive words in investing are, "This time is different." History's rhyme tulips, railroads, dot-coms, housing, different assets, same emotions. Hook. Technology changes, psychology doesn't. Why AI is more dangerous. AI actually works. That's the trap. People assume real innovation equals guaranteed profits. It doesn't. Hook. The most destructive bubbles are built on something real. The confidence phase. When everyone believes they understand the future, risk disappears from their thinking. That's when markets become fragile. Hook. Certainty is the final stage before collapse. Part 2. Why AI feels like a once-in-a-generation bet. AI's promise. AI writes, designs, codes, automates, it touches every industry. Hook. When something touches everything, people stop questioning anything. The internet comparison. AI is constantly compared to the internet. But people forget one thing. Most internet companies failed. Hook. Survivors tell the story. Failures disappear from it. Confusing impact with returns. Yes, AI will reshape the world. That does not mean investors will be rewarded. Hook. World changing does not mean portfolio saving. The fear of missing out. FOMO is the fuel. Nobody wants to be the person who missed Amazon, so people overpay. Hook. Fear of missing out is stronger than fear of losing money. Part 3. Follow the money. The capital flood. Venture capital. Institutions, retail traders. Everyone wants exposure. Hook. When everyone rushes in, exits become imaginary. Cheap money. Aftershock. Years of easy money trained investors to ignore risk. AI arrived at the perfect moment. Hook. Easy money doesn't disappear, it mutates. The rebranding game. Companies quietly reinvent themselves as AI first. Sometimes nothing changes except the pitch. Hook. When language moves markets more than results, trouble is close. The feedback loop. Higher valuations attract more capital. More capital inflates expectations. Reality gets delayed. Hook. Bubbles don't burst early, they burst late. Part 4. The warning signs. Revenue problem. Many AI companies earn very little relative to valuation. Hope fills the gap. Hook. Hope is not a balance sheet. Cost reality. AI is expensive to train and maintain. Margins are not guaranteed. Hook. The future sounds cheap until the bill arrives. Commoditization. AI tools are becoming similar. Fast. Differentiation disappears. Hook. When everyone has the same advantage, no one does. Regulatory shadow. Governments don't move fast, but they move hard. AI regulation is inevitable. Hook. Regulation always arrives after the party and shuts it down. Investor blind spots. Most investors don't understand AI. They're buying belief, not mechanics. Hook. The less people understand something, the more confident they become. Part 5. How bubbles actually collapse. The myth of the Popeye bubbles don't explode. They leak, then collapse. Hook. Crashes feel sudden only in hindsight. Possible triggers: missed earnings, interest rates, regulation, one major failure. Hook. Bubbles don't need a big reason, just lost faith. Liquidity vanishes, everyone rushes to exit. There is no exit. Hook. You can't leave a crowded trade quietly. The survival stage: layoffs, shutdowns, consolidation. AI survives, speculation doesn't. Hook. Innovation survives bubbles. Investors often don't. Part 6. Is this time really different? Yes, and no, AI will change everything. But change does not guarantee profits. Hook. Being right about the future doesn't mean being paid for it. Power law reality. A few winners take everything. Most companies vanish. Hook. Revolutions reward concentration, not participation. The investor trap. People confuse industry growth with personal success. That mistake is expensive. Hook. You can be right and still go broke. Part 7. How to think clearly, separate hype from value. Ask simple questions. Who pays? Why? How often? Hook. Simple questions destroy complex hype. Cash flow truth. Eventually, revenue matters. Always. Hook. Reality always collects. Timing illusion. Being early feels smart until patience runs out. Hook. Markets can stay irrational longer than conviction lasts. Post-bubble opportunity. The best investments appear after crashes, not before. Hook. Fear creates value. Hype destroys it. Conclusion. Final warning. The big picture: AI will define the future. But markets don't reward belief. They reward discipline. Hook. The crowd is usually right about direction and wrong about timing. History's lesson: every generation believes it's smarter than the last. Every bubble proves otherwise. Hook. New technology doesn't erase old mistakes. Final thought: strong close. AI might be the greatest tool humanity ever builds, but the question remains: will this be remembered as the start of a golden age, or the moment optimism blinded investors again? Final hook. The people who win aren't the loudest believers, they're the calmest thinkers.